Welcome back, everybody. And today, I want to discuss my thoughts on the gold market. Now, it's been interesting to see what's happened with gold. Um, so, if you let's go back even to 2015. I want to start there because I don't think a lot of, some of you guys will remember, but like a lot of the younger people, like Gen Z, don't really remember what happened during the financial crisis. They were probably like, if they were even born yet, they were probably like 5 or 6. I was in middle school. I was going into high school, so I remember what happened with the financial crisis. And I remember my dad just looking at his stock portfolio and being like shocked at everything happening. And just, we got through it as a family. And, a lot of people had to, but it was tough for a lot of people. And like when your stock portfolio is going down 30 to 50%, what do you do? Like, you can't really do anything. You're just a sitting duck. And same thing with gold. Same thing with really anything in the stock market or assets in general. Most of us are just sitting ducks. We're not, having an active participation in the market dynamics. So when it comes to gold, remember that like this has been a long time coming. Okay. So we've been waiting on this. We've been sitting on this for a while. But back in the 2008 financial crisis, what a lot of people forget or don't remember is that gold actually peaked off right about $2,000 an ounce. In fact, if we look at this chart, you can see that right about here in 2011 is where we peaked off. And what happened after that is that gold sold off, and it took a long time to get back to those all-time highs. In fact, it took all the way up until I believe it was 2020 to get up to those all-time highs. So gold itself, after peaking off, if you were FOMOing into gold at these prices here, then you would have lost big because it took a long time to, and meanwhile, you missed out on a lot of the growth of the tech industry and a lot of the growth of stocks like Amazon, Nvidia, Palantir, all these, Tesla, all these companies. And I missed out on some of those too, let's be honest. But so like the point is though, if you were just investing in gold, there's an opportunity cost, because even though gold is seen as the safe haven, even though gold is seen as the end all be all to your financial problems, just buy gold. Gold will solve all your problems. The economy's collapsing, buy gold. The dollar's going down, buy gold. There's uncertainty, buy gold. The problem with just buying gold is that you are significantly impacting your opportunity cost. And what I mean by that is, once again, you have all these tech stocks that from 2011 onward were skyrocketing. You would have bought gold here thinking you're going to continue to make money. Meanwhile, the fear and all of that from the financial crisis started to subside. What happens? Well, gold crashes. And in fact, gold crashes all the way back down to 1,000, so a 50% retracement. So while the stock market in 2008 was going through a significant decline of 30 to 50%, gold, while the stock market was rebounding, was going down, and your opportunity cost was horrible because or your opportunity cost, I should say, was very expensive, because you are now sitting on a 50% decline of gold. Let's say even if you bought at 1,500, still you're down 33%. Some people may have bought under 1,000. Maybe some people were buying before the 2008 financial crisis down here at 700, so they're still in the green. Whatever, right? But a lot of people are going to be FOMOing into this because they hear on the news that gold is going up. It's kind of similar to what's happening now, I think. Gold is already at $4,000 an ounce. So we're going to go over where I think it's going next, and I'm going to give you my perspective. I've kind of mentioned this in a couple other videos, but just looking at these technicals, and going back to the fact that there's a massive opportunity cost. It took all the way up until 2015 to bottom out here at 1,000. And then after that, as you can see now, it's been doing well. We've been on the uptrend. So the bear market for gold lasted about 4 years. And this was following the bull market for gold, which occurred really, the bull market for gold was going on for a long time, right? This was actually, go back all the way to 2000, and gold's at $250 per ounce. Now that would have been a good buy right there. Okay, so then gold skyrockets to 300, up near the year 2000. But this has been a long-term bull market. The problem is that, it's the timing of everything. And there's also a bear market mixed in here. So you have a bull market for about 10 years, a bear market for about 5, and now we're back in the bull cycle. So and I would say this bull cycle has really been lasting since, this is mostly sideways trading. you could argue it bottomed out in 2015, but really the ball started rolling in 2018. 2018, 2019, when the Fed was still, I think they were starting to raise interest rates at this point. They didn't cut interest rates really until closer to 2020. I think when 2020 hit, they dropped it all the way down to zero. But interest rates and all that aside, I remember this period right here, 2018, 2019, gold was still relatively cheap. And this would have been a very good buy down here. So then you really get into 2019 and 2020 when things really start taking off. Then gold peaks off at 2000 in 2020, as I mentioned. And here we are now into this massive bull cycle that has been going on, I would say, really since, it's hard to say when the bull market actually began. But, I mean, we really did hit rock bottom here, like especially in 2018. I would say 2018 around, $1,200 an ounce. That was really what pushed gold higher from that point forward. So from 1,200 to 4,000, here we are. And what do I always tell you guys? Your maximum point of opportunity. What is your maximum point of opportunity? This is definitely not your maximum point of opportunity. Now, I'm not saying gold's not going higher. I'm not saying it's not going to go to $5,000 or $10,000 an ounce. What I am saying is that, if you were interested in buying gold, it probably would have been better to do so under $2,000 per ounce. So as of right now, if we zoom in here to this chart, you can see how it's just getting very, the momentum is there. The momentum is there. And I think, $5,000 I have mentioned is a psychological level. I've also mentioned in previous videos that I think gold can go to $10,000 plus, maybe even $15,000. But does it go there in a straight line? I'm not so sure about that. Because think about the factors for gold. Now, on one end, you have the uncertainty around AI, geopolitical uncertainty, economic uncertainty in general, with inflation, with interest rates, job losses, right? Uncertainty, more uncertainty. When I mentioned AI, it kind of ties into that. Uncertainty in terms of the future, like where are we going as a society? Why is the cost of living so high? Why do people struggle to afford basic necessities when previously it wasn't like that? Or maybe it was, but it wasn't as bad. The middle class seems to be shrinking. There seems to be more people impacted. So this is all uncertain. So, gold needs to go up. There's geopolitical tensions. There's, the potential of World War III, it seems, at every corner. So these are some of the factors that have been driving gold up. And if these factors continue, then I think $5,000 gold and higher is in the picture. But, sentiment can change quickly. And that's one thing that you have to learn in the market is that sentiment is always changing. And it can change on a whim, in the snap of a finger. And the problem a lot of times I see is that as people get sucked into these momentum trades, they also get sucked into the narrative associated with those momentum trades. And I've been guilty of this as well. So you buy gold and now you're emotionally attached because maybe you put a good amount of your portfolio into it because you're emotionally investing because you believe that at $4,000 an ounce, I have to buy gold right now or I'm going to miss out. I'm going to miss out on further upside. I've already missed out on the previous upside. So now you're getting into FOMO. You're not at your point of maximum opportunity. And you've already missed out on more than 100% of the gains from under $2,000 an ounce where you could have bought 5 years ago. Or, not 2019, 2020. You could have bought well under $2,000 per ounce. But now you're chasing. So that's the problem I see. Now, on top of that, you are emotionally investing, like I said, and you are, I don't know what the right word is, but you get the point. Like, you're FOMOing, basically. You're FOMOing into the trade. So at $4,200 an ounce, the question is, how much more upside does it have? And nobody knows the answer, right? But my prediction has always been, as you approach that $5,000 level, you're going to see more sideways trading. And I think what's going to happen is it's going to test that $5,000 level, bounce off that $5,000 level, and you're going to start trading in a sideways pattern. After that is anybody's guess. But I don't think that we're going to see the type of upside that we've seen in the last year or two in gold. I think the momentum is going to start dying down. I think there's going to be some profit taking. And I think that, obviously $5,000 or $10,000 gold long term is my target. It always has been. And I've made previous videos on this. But just remember what your opportunity cost is as well. Remember what your point of maximum opportunity is. remember what FOMO is and what, like ask yourself, if I was to buy gold right now, if I had only $10,000 in my portfolio and I put all $10,000 in gold, or let's say 5,000 on gold, 5,000 on silver, what are the chances of that investment making better returns than buying 5 of the top AI companies? Maybe they're not even NVIDIA or Amazon. Maybe you're doing research on companies that are up and coming that could be, maybe they're not quite there yet, but they're getting there, and you're very confident on these companies. So you're investing, you're taking bets on companies that could really pay off, right? So what are the chances of you making money on, gold and silver, or even just 2 tech stocks that you think are going to do well? I mean, you could argue the technology bull run is going to be over soon. You could argue that it's been going on for far too long, and that there's nothing we can do. The bear market's coming. The stock market's going to crash. It could happen, but it hasn't happened yet, right? It's been going on since, you could argue this has been the longest bull market in history. So are stocks overvalued? Potentially. But at the same time, the reason stocks have been going up for so long is because of the fact that we've had all this technological innovation over the last 10 or 15 years. So that's a big part of it. A lot of the technological innovation, a lot of the productivity and everything is tied to the stock market. Companies are much more productive. Now, don't even get me started on wages and jobs and all that and how it's not fair. I understand, but this is the reality. Companies are much more efficient than they used to be. New technologies have come out in the last 10 or 15 years. The stock market is reflecting that growth and that anticipation. On top of that, we've had a massive injection of liquidity by the Fed, and that was in 2020. Now, with interest rates going down again, it's going to be interesting. But I just wanted to give my thoughts on gold and why, people always point to gold as being this safe haven investment and how it's going to protect you. Honestly, guys, if the economy were to collapse tomorrow, and everybody's in anarchy and there's no jobs or whatever, I would much rather have an underground bunker with beans and bullets. If that's, or maybe not even, maybe I'll just go down with the ship at that point if society's really that bad, right? But that's the point. So are you really going to have your gold and silver protect you in the event of some type of crisis? Because I think people get warped on this mindset. They think it's like salvation or something, which I just don't agree with that sentiment. And I'm probably going to get a lot of hate in the comments about, why are you hating on gold and silver? I'm not hating on gold and silver. I'm just thinking in terms of okay, look, we've already had this type of move. We've already seen explosive growth previously in tech stocks. People who bought gold in 2011 missed out big time on the growth of these stocks. And now gold is not at the point of maximum opportunity, and a lot of people buying are going to be FOMOing in, hoping that gold not only goes from 4,000 to 8,000, instead of 2,000 to 4,000 like it was, but now you got to bet on it going from 4,000 to 8,000, and then the next person who buys at 8,000 has to hope it goes to 16,000, right? So it's at a certain point, there's a greater fool with everything. And so how much longer does this gold run have? I don't think it's over yet. I think we're going to trade sideways, and I think we're going to continue to test that $5,000 level. I think we're going to get closer to that level and eventually test that level. But are we going to break through right away? I don't know. So I just caution anybody out there who is super bullish on gold right now, because I think it's already had a pretty good move. And with that being said, I'll leave it at that. But thank you so much for tuning in to this video. Hope you all are doing well out there. Take care, and we will see you in the next one.